C3 AI just released their latest quarterly figures. Actually, no. Maybe I should say C3. No. C3 Energy. No. C3 IoT. Nope. I think it's C3 AI now, right? After all the changes that the company has gone through, all the name changes, I think they're going to stick with C3 AI. I mean, at the end of the day, it's the best sticker out there, right? AI. The best one. The best one. And apparently, it's the original enterprise AI company. Okay, anyways, the company released their latest quarterly figures, double beat for the quarter. And yet, stock is down at the time of making this video, 19%. Why is that? Well, if you followed the earnings videos on the channel the last couple of weeks, you know it doesn't matter what happens in the quarter. If your guidance is weak, well, you are going to get hit and hit quite hard. So, let's discuss all of that in this video. Like, subscribe, hit all the buttons, notification bell on as well so you don't miss any future videos. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So C3AI is now a company worth around $2.5, $2.3 billion or so. Year to date, it's going to be down, well, way more than 25%. Now, I'll give them that. It's the growth rates for the top line. It's expected to grow 23% in fiscal year 2025, another 21.2% in 2026, fiscal year that is, and then 17.8% in fiscal year 2027. So it's not a slow growing company, okay? It's not a slow growing company. It's also not the super fast and profitable growing company either, but okay, we'll give them that. They said they had a solid start of the fiscal year with rising demand for enterprise AI driving our 6th consecutive quarter of accelerating revenue growth. C3 AI is the original enterprise AI company. Our unwavering commitment to solving the most challenging problems in the enterprise has led us to what we believe are the highest level of customer satisfaction in the industry. Like I said, for a company that says that it is the original enterprise AI company, they did go through quite a lot of name changes. Anyways, as you can see, it's true. Quarter over quarter revenue continues to go up by not much, to be honest. I think it was 0.7% quarter over quarter growth. Subscription revenue did drop quarter over quarter, but the fact that professional services finally went back up by quite a lot quarter over quarter is why you're seeing total revenue up quarter over quarter, and that continues the trend of consecutive accelerated revenue growth, which you can actually see right here, right? If we go all the way back to Q1, that quarter only grew 11%, then we've got 17% year-over-year growth, 18%, 20%, and now 21% year-over-year growth. But here are the couple of questions that I probably asked already 3 months ago in the last earnings report review. Average selling price is down yet again, quarter over quarter and even year over year. RPO also continues to trend down. So yeah, that's a problem. Subscription revenue percentage growth year over year is now at 20%, down from 41% in Q4. Of course, with Q4, if you compare it year over year, I mean, Q4 fiscal year 2023 was only 1% growth, Q1 8%, so a little bit tougher, but for a growing company, should not be an issue. Moving on to the deals and average TCV, it's actually a small improvement from Q4. Now the average TCV is down from 0.9 to now 0.7, but the amounts of deals, especially the under $1 million ones, have increased quarter over quarter from last quarter 36 to now 58, and of course an increase year over year as well. Moving to the deals between 1 to 5 million, we're at 11, last quarter was 10, and last year same quarter was 9. We also have 2 deals between 5 to 10 million dollars, last year 0, and last quarter 0 as well. But last quarter we did have 1 deal of over $10 million. As for the bookings diversity by industry, finally we're seeing here a huge shift. If you look at fiscal year 24 Q1, 67% came from federal defense and aerospace. I mean, it's good to have that. It's a safe thing to have. But now that is 31%. Oil and gas sits at 17.1%. State and local at 11.7%. Professional services increased quite nicely here, 10.1%. So we're seeing quite a good shift. Diversity for these types of businesses is quite good, because let's say the majority of your revenue comes from a handful of clients and one of these clients suddenly says, okay, actually, no, we are going with another solution, then you're probably going to get hit and get hit quite hard. Of course, this is by industry, not specific clients. Then as for guidance, and this is the problem basically, so they expect Q2 revenue growth to be between 21 to 28%. By the way, that gap is quite big, and the same for fiscal year 2025, growing between 19 to 27%. If you look at what the consensus numbers were for Q2, that was at the midpoint 91.3, so it came in a little bit below. The difference here is 0.2, that's in millions. And for a fiscal year 2025 guidance also came in a bit below 1.4 in this case. So yeah, for a company that, again, says it's in the middle of all this AI revolution, it's the original enterprise AI company, we're seeing lots of positive momentum, etc., etc., the market was expecting better guidance. And yet it did not get that. And we've seen plenty of software companies, plenty of so-called AI companies that did grow quarter over quarter, much more than this one, did also provide better guidance. We've seen also companies that provided worse guidance than this, and the stock got punished. But when you talk the talk, you better walk the walk. Now, other than that, gross profit, GAAP gross profit for the quarter was $52.2 million, representing a 60% gross margin. Net cash provided by operating activities was $8 million, and positive free cash flow of $7.1 million. So, okay, that's quite good. Looking at the graph right now, the downtrend that started here in June of 2023 continues. The stock did not go over it back here in the middle of July, even in the middle or early June, it failed to go over that. So it went back down, and now we're back to levels not seen since May 2023. Back then, it does seem like the stock did find some support here at around $17 or so. Of course, this on the weekly RSI. When the market opens, if it stays like this, down 19% or so, then it's going to be pretty close, if not oversold. So yeah, if you want to trade this, maybe look for a rebound here at around $17 or so. And if it does go lower under it, and this area does not hold, then the other one is probably just below $16. And of course, the lowest one was here back at the end of 2022. I don't think we're going to go this low, because this is where sentiment was really bad across the board, not just for C3AI, but that was closer to $10, $12 or so. That's basically the worst case scenario. So all in all, I mean, a double beat for the quarter, but it's not like these numbers were huge beats, right? The quarter over quarter growth was not that impressive, but okay, fine. Overall, they're still expected to grow year over year, 21, 23% or so. So that's okay. I mean, we've seen way worse companies, right? We've seen companies that can only grow 10%, 11%, maybe even 15% year over year. Let's be honest, if you are willing to talk about AI and stuff like that, you are expected to grow a bit faster than that. So C3AI is growing in the 20% range. I mean, Palantir itself, because I know we're always comparing C3AI to Palantir for some other reason, they're also expected to grow 23% or so. Well, expected to grow more, right, from bullish investors. So yeah, let's see what happens. But all in all, I mean, you know which side I'm taking here. For a company that keeps on changing its name because it has to follow certain trends, that's already a red flag for me. Good luck to all the holders. I have no position in that company, no long, no short. I never short companies either. Now you're going to ask, why are you covering this? Because I know a lot of people that follow Palantir want to know what C3AI are doing. And I know that some of you are holding C3AI as well. So here's the update. That's why the stock is down 19%. It's purely because of guidance, and probably it's the company's mistake. It's their own fault, because they're talking about AI. Oh, lots of momentum, and then you cannot deliver. Again, maybe they're sandbagging. Could very well be, but we'll see that in 3 months, maybe 6 months or so in the next 2 coming quarters. That's about it for me in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Share your thoughts as well, and I see you all in the next one. Bye bye.